Well, yes, all 50 Nifty companies have now reported their numbers for the first quarter of FY27. 21 companies have reported better than expected set of numbers, 10 below, 14 in line, and 5 companies have reported mixed set of numbers for the first quarter of FY27. Let's take a look at how revenue growth looked like on a year-on-year and on a sequential basis. Revenue growth on a sequential basis was largely flat, but 17% is what we have seen on a year-on-year basis. EBITDA growth of 4.2% sequentially and about 16% on a year-on-year basis. PAT, in fact, on a sequential basis has declined, but we have seen a 8% growth on the bottom line as far as year-on-year basis comparison is concerned. Let's also talk about margins. Now, in the first quarter of FY27, they've come in at about 18.3% versus 18.5% same time last year and 17.5% in the previous quarter. So, we have not seen any major deviation when it comes to margins, both on a sequential and on a year-on-year basis. Let's also put the spotlight on numbers other than oil and gas. We have excluded Reliance Industries and ONGC. Those are the two oil and gas related companies in the Nifty 50 basket, and barring those, revenue growth of 14%, EBITDA growth of 13% and PAT growth of 8% is what we have seen on a year-on-year basis. Now let's put the spotlight on top 5 sectors where we have seen maximum revenue growth in the quarter gone by. We have capital goods, auto and auto ancillary, and consumer durables, consumer services at the top of that list. Consumer services revenue growth of about 117%, followed by oil and gas, capital goods, consumer durables and services with revenue growth anywhere between 19 to 29% on a year-on-year basis. These are the top 5 sectors which have reported maximum revenue growth on a year-on-year basis in the quarter gone by. Let's also talk about the other end of the pyramid. Top 5 sectors we have seen least revenue growth in. FMCG clearly is at the top of that list. Very tepid revenue growth, largely flat as we speak. Construction at about 6.7%, power at 7%, healthcare and financial services in the range of 7 to 9%. So these are the top 5 sectors with least revenue growth on a year-on-year basis. Let's put the spotlight on operating profit metric then, and let's talk about EBITDA growth. Consumer services EBITDA growth was very strong at 79%, consumer durables at 45%, metals and mining again was very strong at 26%, oil and gas and construction after those in that list with about 25% EBITDA growth. On the other end of the spectrum, top 5 sectors with EBITDA degrowth. Healthcare, in fact, has reported an EBITDA decline of about 10% YOY, services about 8%. FMCG revenue growth was flat and we have seen EBITDA decline of about 8%. Construction and auto components have also reported very tepid to lower EBITDA growth in the quarter gone by. Let's talk about profitability. Top 5 sectors: consumer durables, consumer services. We have construction and financial services with PAT growth anywhere between 20 to 45%. And on the other end of the pyramid, some of those sectors which have reported very tepid revenue and EBITDA growth have also reported lower profitability in the quarter gone by. So all in all, numbers were largely in line to better than what the street was working with. FMCG is at the lower end of the pyramid, but on the flip side, capital goods, auto and auto ancillary, consumer durables and consumer services, these are a couple of sectors which have reported relatively better performance in the first quarter of FY27.